Well, the dips are getting bought into actually because we dipped a little bit, but again, we had a bit of a pullback. And the last few minutes, Cipla has really been the outperformer from the Pharma pack. I think, that's one of the stocks that's closer to around the 52-week high, if I'm not mistaken, in comparison to the other names. Yes, it's closer. It was at 52-week high yesterday. And maybe we'll pull up Cipla with the Pharma pack, the Pharma index year to date. And I think it should show a bit of an outperformance in comparison to what's going on there. But the sector that's really done well, Deven, has been the cement stocks. Now, the street is a little bit skittish, whether it's profit-taking, whether it's because the promoter entity has gone ahead, the Adani Group, and pledged all their shares in ACC and Ambuja Cements. But those stocks as well have come off the low point of the day. How would you approach this space? Do you believe that go in for these two names because they have a change of promoter entity? Or do you believe that these two entities, well, they're going to be on the prowl, they're going to be buying assets, so you go and play it the other way around? Maybe buy the India Cements of the world, the Sanghi Industries of the world, or maybe a Novoco as well. It'll be tricky. Case in point, Novoco, it was close to 500 rupees 2 sessions ago. Now it's hovering around the 420 rupees. Your take?
So Nigel, I think two ways to look at this particular subject. ACC and Ambuja combined, of course, I think is likely to grow faster because of, I think, the larger amount of fund infusion by the promoters into the company. And not forgetting that I think they already carry the cash in the balance sheet of around somewhere around 3,600, 700 crores as of last quarter. So I think that is one strong point as far as I think their growth is concerned. You may call it, I think, brownfield expansion, you may call it greenfield, or at the same time inorganic growth as well. I think which could happen. But most importantly, SEC and Ambuja combined, I think, would have a few other advantages as I see it. I think it is related to cost. Largely because of the fact that I think Adani is basically leveraging their infrastructure play, including I think the mining of coal and I think bringing it from the overseas offshores into the port. I think they would probably be in a much better position to bring down the cost of energy as well. Along with that, I think using the waste fuel, I think which normally I think Ambuja has been I think pioneered in this area of activity. If they end up successfully, I think creating higher amount of waste fuel usage, it could also further bring down the cost of cement production. And I think in the competitive scenario, when you're expanding the capacity because of the higher demand which is emerging into the economy, if you bring down the cost, then possibility of I think reporting I think larger amount of profits at a faster pace of growth in profit would be very high. So that's where probably I think you find ACC and Ambuja combined as a merit. Of course, I think in the shorter run on expectations, I think everything is discounted and probably the stock price would ahead much faster. Maybe it cools down. I think during that correction, in my viewpoint, I think the larger cement companies like ACC and Ambuja or for that matter Ultratech would be a good choice to buy into the portfolio for safe position. And some of the smaller companies which are languishing probably I think would be a takeover target. So from that perspective, they would be driven on the news, I think, as and when it happens. So one will look at this sector more favorably than otherwise.
Okay, well, just looking at the options positioning, because today is the weekly options expiry, and the Nifty has, of course, in terms of the numbers that still matter, 17,600 put has seen massive put writing, and it's almost premium down to zero on that one, and 17,700 as well. So it looks like that are the two sort of bands to work with. On the Nifty Bank, it could be very interesting because, we, in terms of the levels where we are close to 40,500 put on the put side is where we have the open interest build up, and 40,700 put as well. These are the two strikes where you have the highest open interest build up. So we will see how things move. The one space which has done well today is chemicals. Tata Chemicals is now in fact one of the top gainers. There's of course some others as well in this space. Deven, any thoughts?
So I think in general, the business condition wise, I think they are looking really favorable. I think to a greater extent, I think the chemical industry is now talking about having a larger amount of play because of the slowdown in the I think the energy related issues due to the problems I think in Ukraine and Russia in European region. And I think as a result of which we are likely to see the higher amount of export push coming in for some of these companies. Of course, I think the companies which are operating the CAMS model an API model, I think they probably have related to much safer role to play, I think, in this kind of a situation. In my viewpoint, I think the companies are available at a corrected valuations. I think they should be looked at. Some of the mid-size or the newer companies which have entered into the market, they're still expensively traded. Any correction in the price would be, I think, a good opportunity I think we like this particular sector because I think we see the visibility of around 20% kind of a growth in earnings over next 3 years' time on a CAGR basis. So certainly, I think select companies would be interesting buy to add into the portfolio in corrective price.
Okay, Aptus Housing is the other one which is in focus. It's been doing well since the morning. It's a small housing finance company and very low value ticket size in terms of loans that they give out. Citi has initiated coverage and it's doing well on the back of it. 314. Abhishek is here with more details. Abhishek.
Well, Prashant, as you mentioned, Citi has initiated coverage on Aptus Value Housing with a buy recommendation and a target price of 425 per share. They say that it's a highly profitable, affordable housing leader in terms of giving small ticket size loans to affordable housing segment. It has demonstrated quality underwriting as the credit cost has been below 20 basis point pre-COVID, and even during COVID, the peak credit cost was around 86 basis point. So good execution should ensure CAGR on loan front of about 29% between FY22 to 24. Pricing power and efficient cost would structurally help in strong ROAs for the company. So they build a 60 basis point decline in net interest margin over FY22 to 24, given the fact that there will be high share of home loans as well as leverage which will kick in. So they expect an ROA of 7.4% and ROE of 16.5% for FY24. They have said that core geographies are underpenetrated, which gives scope for growth, as well as the fact that companies also foraying into new geographies which will offer growth to them. Back to you.
Okay, Abhishek, thanks a lot for that. Deven, before we let you go, have you tracked this stock or any other in this space?
So, no, I have not tracked this particular company, but housing finance as a space within the NBFC remains absolutely very, very convincing and attractive. Largely because of the fact that I think we are seeing the credit offtake in the vicinity of around 20% in some of even the larger companies. And this is promising to be on a higher side going forward as well. So from a perspective of, I think, looking at the company from 3 years point of view from now, if you are seeing a 20% kind of a credit offtake, I think on a CAGR basis for next 3 years, definitely you are safe as far as your investment is concerned. Any shock in the market, I think, could protect you on the downside. At the same time, I think most of these NBFCs, some of the larger NBFCs in particular, they've been managing the liability side very well. So as a result of which, I think the spread in normally a priority sector, I think it counts maximum. And a spread, I think, would be probably well protected. All in all, put together, given the growth and given the ability on the balance sheet side of some of the larger housing finance companies, I would think that I think they would be in a reasonably good position to deliver the profit performance over next 2 and 3 years' time. So I think one could possibly keep investing into this particular space, I think, in every form.
Deven, thanks a lot for joining us. Good talking to you as always. Let's move on.